Good afternoon and welcome to this Chartered Insurance Institute event at Labour's virtual conference this year. This focus of this fringe is going to be on the role of insurance in driving a green, sustainable and fair recovery. Got an amazing panel for you this afternoon, so really looking forward to this event, and thank you to everyone for joining us as well. I'm Laura Hutchinson. I'm the Principal Political Consultant here at Dods. I'm also the Head of UK Political and Business Intelligence. So it's a lot of jargon in that title, but essentially what I do is try and help businesses, charities and public sector leaders try and navigate and understand this rather chaotic and turbulent political landscape. For those of you who listened to Chris Whitty and Patrick Vallance at their press conference this morning, it's very clear that this crisis is nowhere near over. And although obviously principally a health crisis, the longer that this goes on for, it becomes an economic one as well. And attention is slowly beginning to turn to the recovery. The theme of 2020 has very much been one of uncertainty and risk. The insurance industry is centered around reducing risk for business and individuals and reducing their exposure to that. So really looking forward to hearing from the panel today about just how they're managing to do that. We've got some real sector experts here and Wes Streeting as well. So I'm just going to get everyone to begin by just giving us a sort of very brief overview of what they do and some opening remarks to begin with. Matthew, should we start with you?
Hi, thank you, Laura. And as Laura's already, my name is Matthew Connell. I'm Director of Policy and Public Affairs at the Chartered Insurance Institute. And so my job is to promote public trust in relation to public policy, helping our members understand what direction public policy is going in, and work as professionals along the spirit of what policymakers and regulators are trying to achieve, as well as the letter of the law. And I think as Laura said, in a way, these environmental, social and governance issues are very much come naturally to insurers, because insurers do provide social goods. They provide consistency and continuity at a time of crisis through their traditional insurance products, and also provide risk management expertise and advice to clients. So in many ways, this is a natural thing for insurers to do. But as with so many things, it's all about maintaining a long-term view and not succumbing to a short-term view. So in the long term, for example, environmental sustainability is absolutely crucial to us all. And I think insurers are in a position to take that long-term view, because as investors in the market, with 1.8 trillion pounds invested in the UK markets, insurers have an interest in backing things that work over the long term, and indeed ensuring risks that are sound over the longer term. So in areas around sustainability, like flooding, insurers have always taken probably a more long-term view, perhaps than some governments, in terms of pressing the need for proper flood defences, proper risk approach there. And more widely, we've had some major insurers come out and talk about how they're not going to invest in or underwrite firms that are dependent on the most heavily polluting fossil fuels as well. And similarly, in a social dimension, where again insurers look over the long term, what they can do is often notice things that are happening in society that they, as the people who are called in when something goes wrong, means that they're more aware of, and at the same time intervene in those areas. Intervene in those areas in a way that really underlines their commercial interests. For example, commercial interests of maintaining staff engagement. So, for example, one quick example: one insurer recently in the charity space that noticed the issue of hygiene poverty, probably because it works with charities that are dealing with this issue more immediately than other companies, and has kind of built its entire CSR policy around alleviating hygiene poverty, which has brought huge buy-in from members of staff and has been a hugely positive part of its HR policy. So again, all these things come naturally to insurers, but I guess it's the third and most boring aspect of ESG, the governance side of things, that's really crucial. So for example, in sustainability, governance is crucial in making sure that we have the data and the decision making needed to invest in things that are genuinely sustainable. In the social dimension, it's about being aware that our products aren't there to make a quick profit, but are there to serve society. So I think that's the big challenge for us, is creating that sometimes tedious governance structure, and probably think of extending it to governance and culture, so throughout the organisation, to underpin the things that should come naturally to us in terms of sustainability and making the right kind of social impact.
Thank you, Matthew. Ben Wilson from the ABI.
Hi, yeah, I'm Ben Wilson. I'm Director of Advocacy at the ABI. And just to say from the outset, we really welcome the opportunity to take part in this panel. I think, as Matthew has said, insurers are right at the front line in response to climate change in sort of many ways. So I think sort of three obvious ones are, providing the policies that support customers respond to the increased risk of flooding and climate-related events. So we're sort of uniquely exposed in managing and experiencing the physical risk. Secondly, as large-scale investors holding the power to unlock investment in green assets and social infrastructure. I think finally, as product innovators, and I think if you look at our main members, there's a lot going on in that space. I think it's the case now that our members underwrite and provide insurance of low carbon technologies in more than 60 countries now. So just to say, also that it's been great to see the Labour Party's continued commitment and focus on climate change throughout the coronavirus. And we've responded to a lot of their sort of recent consultations, including the Green Recovery consultation. And I think, as sort of Wes has said in a lot of his sort of framing in previous speeches, the challenges of coronavirus are significant, but they can't, distract from responding to the current climate change crisis, something I know Prince Charles has talked a lot about today too. So I think, you can already see the impacts of climate change across the globe. And I think, it's 1 in 6 homes that are now exposed to climate-related flood risk, for example. And it's not just about flooding, it's about subsidence due to heat waves, frozen pipes. We're seeing sort of hundreds of millions of pounds of claims every year now as a result of that. I think, the ABI and many of our members are part of ClimateWise, so we also take quite a sort of strong thought leadership role in terms of taking action and responding also to sort of stringent climate reporting measures from the Bank of England and regulators. And we are very much formal supporters of what's called the sort of TCFD framework for disclosing climate-related risks. And we do support measures that government's taking in terms of, I guess, to Matthew's point around the G, putting more onus in terms of reporting transparency, including not just in insurance, but also pensions and trustees. So, as I say, I think we all accept that there's a lot happening. There's a lot of innovation in the insurance space, but there's also a lot more that needs to be done. And obviously with COP26 next year, there's a huge opportunity for the insurance industry and the wider society to prioritise green investment. I think, as Matthew said, insurers hold over 1.7 trillion in invested assets. I think one of the things that we've made clear in our sort of consultations to the Labour Party and elsewhere is that the current regulatory framework does hold back green investment. There's currently an upcoming review into what's called Solvency II regulations. And this is the regulation around how insurers can invest their capital. And we think as part of that review, there is an opportunity to look at how the industry can contribute to the kind of green industrial revolution and play an even greater part in delivering a net zero economy if there are changes to that regulatory framework. So that's all I want to say. Really happy also to talk about some of the sort of individual work that's some of the innovation of some of our members. Thanks, Laura.
Thanks, Ben. Yeah, we'll definitely get onto that. And Wes, I bet you didn't expect to be quoted with Prince Charles there. Wes, I'm sure most attendees on this know who you are, but do you just want to give us a quick overview?
Yeah, sure. And some of you I may have met previously when I was a member of the Treasury Committee over the last 5 years. So I'll just introduce my reincarnated self. I'm now Labour's Shadow Exchequer Secretary. So as part of my responsibilities within the Shadow Treasury team, I'm responsible for the sort of climate change dimensions of Treasury policy. And this is an area where obviously there's an overlap between the work that I do in that domain and the work that Pat McFadden does more broadly as Shadow Economic Secretary on financial services. And on this, we tend to work very closely together. I guess just by way of sort of scene setting, you're absolutely right, Ben, to say that climate change remains a really big priority for the Labour Party, and I think it should be a priority for our country and a priority for the world. If there's one thing that this pandemic has shown us, it's what a genuine response to an emergency looks like. We've seen every government department, every public policy issue is now seen through the prism of how we tackle this public health emergency in the form of COVID-19 and the fallout. And I think if we're honest, hand on heart, it's been over a year since Parliament declared a climate emergency, and I don't think we've seen anything like an emergency response. And if we think that COVID-19 has been disruptive to business, to everyday life, it is nothing compared to what catastrophic climate breakdown will do. And future generations will curse ours if we do not act. And if, you know, even in spite of all of the evidence and all the warnings and all the documentaries, I mean, there's only so many times we can wheel out David Attenborough to show us the tragic consequence of what's going on to our planet. You know, it will be really unforgivable. What I find interesting about the conversation about climate change from a sort of green finance perspective is that I think in lots of respects, industry is the head of government and a head of public policy in so many respects. I actually think Mark Carney's leadership at the Bank of England was fantastic, and he was saying things about the role of financial services in tackling climate change long before ministers, I think, had woken up to sort of some of the challenges and some of the opportunities. Obviously, it's a critical issue for the insurance industry. I don't think you need me to tell you that. Obviously, as climate breakdown occurs, we'll have a higher number of costly claims for insurers to deal with as a result of extreme weather events. There's also the flip side, which is the huge numbers of investments that the industry holds, and where those investments could be put to really good use. So at this stage in the parliamentary cycle, where before we sort of map out all of our policies for the next general elections, I think it's fair to say we're keen to jettison some existing ones and sharpen up Labour's message and offer and credibility with the country. So if you're hoping for me to reel off a whole list of policies, I will sadly leave you disappointed. We're in listening mode at the moment, so hopefully I'll practice what I preach with my 2 ears and 1 mouth by using them in that proportion. But I think there are a number of questions that I would just sort of set out, really. You know, what do we do to make sure that insurance products are available to meet the needs of the most vulnerable customers who are at risk and are already experiencing climate-related risks, whether the health risks or damage to property and all the rest of it? As we think about building back better, what role can the insurance industry play in making sure that, you know, in terms of insurance repairs, for example, how do we make sure that whether on residential or business repairs, that those are done in a way that it reduces the carbon footprint of those businesses? How do we invest in sustainable assets? How do we make you know, pricing in the environmental risks a really good business proposition so that people, you know, are thinking in the longer term, not just the short term? And do we need to create better incentives or disincentives in that kind of space? And also, I mean, and this is where I think you've got a really big role to play, which actually isn't about government telling you to do things or pretending that, you know, me as the Exchequer Secretary to the Treasury after the next general election is better placed to run your businesses for you than you are. You know, I'm very aware of my own limitations and knowledge in this area. But I think it is having a partnership with business and actually having a sort of an open conversation with you really about the role that you can play with your clients and customers in, you know, in helping customers to make better decisions and risk signalling. And, you know, I think there's a sort of whole public policy dimension to the work that you do, which actually isn't about the big heavy hand of the state insisting on things being done, but actually just having a responsible partnership with business to do things. And the final thing I'd just say is that acknowledging that actually in lots of respects, leaders in the financial services industry have been slightly ahead of the policymakers on this. I'm also interested in the leaders and the laggards in the industry. Who are the leaders? How are they leading? How is that making a difference? And interesting and crucially, why did you arrive at that position earlier than so many competitors? And then with the laggards, what do we do to help people catch up? And are there things that, will this be industry led, or are there things that we need to do in terms of the public policy framework?
Thank you, Wes. You've given me quite a lot of questions there as well, so I appreciate that.
I did say I didn't have any answers though, so don't ask me any questions.
Thank you. Shân, Millie, should come on to you.
Yes, hi, thanks very much. Gosh, so much to take on board there. In terms of a little introduction about myself, well, I've been obsessing about the insurance market since 2008. Classic sort of outside-in person, really. I've never worked in insurance, but I've spent all that time working with, and I'd like to think for insurance as well. I'm possibly a little bit rare in the sense that I really do believe in the social necessity of insurance, or maybe lots of people think that, but they just don't put it that way. And so in my professional life within insurance and for insurance, I'm really thinking and working and obsessing about what does it take to make change, and change that works for customer. So classically, the language might be innovation. I spent a long time looking at and working with, and as far as I could, supporting InsurTech where it made sense. And so looking at those barriers to change and the things that work really well within insurance. And given as read, actually, I'd just like to say that my experience of insurance professionals on the whole, and certainly those people frontline customer facing in claims and risk engineering and in other areas, hugely professional, motivated, purposeful professionals in the main, right? So I'm a great fan of insurance in many, many ways, but my experience over those years is also that we can do a lot better in terms of delivering a consistent and high quality and informed insurance choice for the range of customers, not just personalized consumers, but right the way through the value chain. So what are the barriers then? Well, the things therefore that I've come up against and made it my business to understand and learn about and talk about, where I feel I've got something to say and make a difference, covers the gamut of ESG actually. Matt, I don't find governance remotely boring. In fact, I think it's absolutely essential to a well-functioning financial system that works for customers as well as for businesses. But those other areas that I've spent time in and been welcomed into, particularly in inclusion and diversity, it's a productivity killer and a mental health bomb really for many of our professionals. Gender, race, whatever dimension you want to look at, we can do a lot better, and we will make a lot more innovative products that work for customer if we do. Climate change, yes. I mean, I think, Wes, you've been a bit kind to insurance, really. We've been talking about having identified climate risk since 2009. That's 11 years ago. Even the most ambitious firms and the most progressive firms like Swiss Re, and not denigrating the motivation, the skill, the imagination and determination of individuals working across insurance, and particularly in Swiss Re, I know a little bit. Actually, you know, to have a group net zero target of 2050, it's just not fast enough, is it? And particularly when you're at the same time talking about a decade of action, which is absolutely essential. So I think looking at, there's a whole range of questions raised by everyone so far. I think insurance is fantastic in many, many ways, but in many, many ways, I think we can do a lot better being a risk partner to the planet from the climate perspective, but also doing a lot better job with regard to vulnerable customer and making insurance, really making insurance a destination, a professional destination that you can bring your whole self to work, regardless of your socio-demographic group, where you've come from, what your education is, or the colour of your skin in every other dimension. But I'm a fan. I just want to be part of making it better.
Thank you. And last but certainly not least, go on to Johnny Timpson.
Laura, hello and good afternoon, everybody. Well, I'm the insurance person on the panel. I was with 42 years experience in this industry. But let me say now, I've got lived experience of disability as well. I believe in the social purpose of insurance and the social good of insurance. I certainly don't believe in, when people talk in terms of, building consumer trust, well, I'm afraid I have to share with people that, that you don't build consumer trust, you earn consumer trust. And you have to continually to re-earn consumer trust in everything that we do. And we have to deliver on what we do. And as Shân, well, maybe I go back to what Wes said actually about the role of insurance and our interplay with government. I think one of the other things that's quite important for my industry and profession, and it will be increasingly going forward, is that it's all too easy to say, do you know what, if only government did this, or if only the regulator did that. Well, I think the key thing that I've taken from the last couple of years, the Brexit debate, where Parliament has been preoccupied elsewhere, and more recently with COVID, is that we have to do, we have the ability to do things for ourselves, and actually we should do things for ourselves with the customer and the consumer at the heart of what we do. And Shân talked about the social purpose of insurance and the social good and the accessibility, inclusion and diversity. And I agree with all of that. I'd also add on intersectionality, because it's important we have to realize that people exhibit a range of characteristics. And I think, when we talk about inclusion and diversity, I think in my industry and a few others in recent years, the focus has been very much on gender. Well, inclusion and diversity is much more than that. It goes way beyond gender. We're talking about BAM, we're talking about disability, talking about sexual orientation, and we have to think of all of these things. In fact, all of these things into, what we do day in, day out. But let me put my money where my mouth is, because I established the Building Resilient Households Group. I established and chair the Access to Insurance Working Group, of which Shân is a member, and equally the other we've got an ABI representation, a representative on this panel, and Chartered Insurance Institute as well, and they're equally part of my Access to Insurance Working Group as well. So what we're all about is improving access to insurance for everyone who needs it, and when you need it too. But going beyond that, improving access to careers and insurance for everyone as well. And in that respect, I'm proud to be a member of the Chartered Insurance Institute's Insuring Women's Futures programme, which is aligned with the UN He for She initiative, where we're trying to make insurance and insurance careers more accessible to all women of all ages, and our products and services more accessible to all women of all ages too. In terms of the Building Resilient Households Group, that's all about particularly the interplay between insurance and the welfare reform agenda, but making sure that we're making UK individuals and households and businesses more aware of their risks. We're improving their financial resilience to income shocks, particularly those related to health events. And moving on from the Resilient Households Group, that gave rise to the creation of the Resilient Households Task Force, which is chaired by Baroness Julie Drake. And what we were keen to do there was to kind of say, right, well, we need to be able to test how resilient are we and what's the impact of our policies. So let's create a resilience index. And we launched that ask in the House of Lords actually in November last year. And the ONS actually kindly did a test of the resilience index in April this year. I'm really keen to see the resilience index taken forward at national, local, and eventually an individual household level too. For me, there's far too much focus in this country on credit scores. Well, let's look at resilience scores, because I think if we make people aware of the shocks they're exposed to and the steps they can take to be more resilient to them. And then we can reflect that in a score, scoring mechanism. And then we can then empower them to see the advantage of taking steps to improve the resilience that enables them to do more and better things, not just borrow money. Yeah, in terms of the Access to Insurance Working Group, we are very, very focused on improving access to insurance for everybody, but particularly with those people, those consumers with disabilities and health conditions, be those disabilities and health conditions seen and unseen. And we are making a great deal of progress. COVID has been a fact, it has impacted us in terms of its, the industry is having to react to a new disease, which has been challenging from an access to insurance perspective. But the industry has responded really well to that. And I'm really pleased with the response of my colleagues. And great to see a response from the Association of British Insurers as well, who've, on behalf of our industry, have made some pledges to consumers to keep insurance as accessible as possible to as many individuals and businesses as we can, particularly where they've got health conditions.
Thank you. We'll definitely delve into that in more detail. There's a lot to get through there, and just before we get on to recovery and the insurance sector's role there, Ben, obviously you mentioned at the beginning about some of your members and sort of how they've reacted and adapted to the pandemic. Could you just give us sort of a really quick overview about what the pandemic's been like for the insurance sector? Like, how has it coped? Presumably it's been extremely busy, perhaps overwhelmed. Has it sort of identified any loopholes or anything that wasn't sort of fit for purpose at the time of the pandemic? And back to Wes's initial question as well, sort of who are the real sort of, gold star insurance people here, and who are the ones that could perhaps be doing a bit better?
I think just to take the second question and to Wes's sort of challenge, what are the sort of barriers and where can certainly from a public policy, I talked a bit about kind of regulation and Solvency II, and that's with regard to, the investment element. I think the other thing that's really exciting or kind of really interesting as a sort of trend is just the, I guess this whole fact that kind of consumers and the public are really waking up to the fact of how much sort of influence they have. They're really taking sort of control of their own savings, really realizing, I guess, the sort of power of the pound in their pocket. And I know this is in insurance, but if you take pensions, for example, the Make My Money Matter campaign, I think that's actually a really healthy thing. The ability of kind of, investors and customers to sort of hold us as an industry to account. So I think there's sort of two interesting areas from a public policy perspective. I mean, obviously, people like Shân and Johnny are there to sort of hold us as an industry and hold our feet to the fire. So on laggards, I will leave that to them. But I think in terms of where we're seeing sort of innovation, and I won't sort of go into sort of trotting out statistics speak too much, but companies like Aviva, have been awarded the UN sort of recognised 10 years of work they've done in climate change, the Momentum for Change Award, and they were the first carbon neutral international insurer. They're doing a lot around innovating how they make access to sort of underwriting of I guess sort of green innovation as a big thing. But in other areas, like a company like Allianz, they've placed restrictions on the type of investments they hold or have withdrawn from underwriting sort of coal intensive assets or sites. Clearly, there is a bit of a sort of individual members take a different view on that issue. So others prefer a kind of model of stewardship where instead of sort of passing their ownership to another investor, they actively work with the company to build a sort of transition business model. But, there are lots of examples. AXA, Zurich, Zurich has invested sort of more than 2 billion in green bonds. AXA has put sort of hundreds of millions into sort of funding academics to look at environmental risks, and also invested sort of billions in sort of green technologies. So, and then if you think about companies who are sort of doing innovative things about their own operations, there's an example of Bupa, who's done a lot around sort of reducing its sort of operational carbon emissions. So there's sort of lots of examples there. I think, clearly, what we're trying to do is make sure that across the industry, that kind of innovation is consistent, and that's something that, that's the point of initiatives like ClimateWise, where we're working with the University of Cambridge, which is to almost ensure that across the industry we're sort of promoting that level of kind of innovation. So that gives you a bit of a flavour.
It does, thank you, Ben. I appreciate you don't want to name and shame anybody. We'll move on to the recovery sort of phase now, although, as I mentioned, the pandemic is very far from over. Just for those watching, please do feel free to submit questions throughout in the Q&A box there, and we'll get through as many of those as possible. Matthew, for someone who isn't in the insurance sector, climate change isn't something that you would naturally associate with the industry. Obviously that's incorrect now, but could you just talk us through sort of what role you see the insurance sector having in a green recovery, and would you agree with Shân's earlier point that some in the insurance sector just simply aren't moving fast enough on this?
Yeah, so no, I think insurers are often very good at hiding their light under a bushel, and it's interesting. So way back in the early 2000s, insurers really got together, built an organisation called ClimateWise, which is still going today, to really measure and challenge themselves, audit themselves on how well they were doing in terms of environmental change. But more recently, we've seen a kind of a wall of cash going into green finance, and a lot of the banks who are in a position to sort of build products, financial wholesale products, have suddenly found their green credentials, but done so in a way that's maybe been more eye-catching and taken a lot more headlines. So again, it's a kind of recurring attribute of insurers that they tend to do things early but very quietly, and so don't always get as much recognition as perhaps they deserve. So I mean, in a way, sustainability is all the way through in insurance, and particularly if you open it out and look at social sustainability as well as environmental sustainability. But looking at environmentalism alone, again, insurers invest for the long term because, again, I think people think that it's banks that have all these big piles of cash to invest, but actually insurers, because of the gap between bringing in premiums and paying out claims, insurers, as Ben mentioned, have a huge amount of money, trillions of pounds globally, to put into investments. And again, one challenge there, again, as Ben said, is regulators who are worried, prudential regulators who are worried about insurance companies getting bust. They're interested in the short term, how much money insurers can grab hold of at short notice to shore themselves up. But actually, what would help is a regulatory approach that allowed insurers to invest more for the long term, tie up more of their money in a sustainable and well managed way, but to maybe take a few more risks in terms of liquidity and tying their money up into kind of infrastructure products that and projects that help us build back better and more sustainably. I think this government decided to split apart the conduct regulator and the prudential regulator for insurance, but I think maybe one aspect of regulation is to bring those closer together, and also, like Ben said, that there will be opportunities coming out of Brexit, and maybe one of those is to have a look at some of the European regulations that we've inherited and what we can do with those to improve things and make things better. So I hope that answers some of your questions. I guess in terms of what's good and what's not so good, I think I wouldn't maybe talk about laggards, but talk about sort of blind alleys. I think one blind alley is this will create a black box of environmental friendliness, sort of build a way of measuring ESG that's very quantitative, and is sort of proprietorial to whatever consultancy or fund manager invents that box, and then just give an ESG score that everyone else can use, a bit like Shân, Millie said, you know, kind of like a credit score as a shortcut for not really thinking through the issue. I think in the firms that I've seen that do things differently, they place a lot of emphasis in getting continuity and expertise and diversity in their investment management teams, and more widely in their management teams, and focus more on telling people what they're doing and building that into all the advice they give to clients, all the decisions they make in underwriting. So I think definitely in terms of leaders, I think it's the ones that are very open about their thinking and demonstrate how that works throughout the whole organisation. I think that the blind alley is more trying to quantify everything and come up with a score, and then just lazily follow the highest score rather than think about what it is behind the score.
It's just worth saying though that the world of ESG is awash with data and you know, very specific expert data. I'm going to give you one, Video Iris, which is part of Moody's Group. So regardless, really, we're being measured on ESG, whether we know it or not. Bits of the insurance infrastructure will know, particularly in the investment side, because they're much more measured on that stuff now. A combination of regulation and all kinds of other things has made that really important. And colleagues and friends in ESG who've been in it, slaving away for years, 20 plus years before it was remotely sexy, are telling me they really can't quite believe how seriously what they do is being taken now. It does feel like all of a sudden. So just to point out, you know, that firms are scored on ESG, insurance is scored on ESG. I've seen some of those numbers, and it's not that pretty, but it's not that horrific either across the ESG spectrum when you look at other types of corporates. So the measurement is there. And I guess this comes to one of my key points, that there is a difference, isn't there, between being active. And again, I am not denigrating remotely all the great stuff that is being done. Every piece of great stuff gladdens my heart and reaffirms my trust in insurance, right? Because I'm a believer. However, that is not the same as leadership, or as Butch Bacarni of the UN calls it, forceful advocacy. We're not forcefully advocating as a sector. I think there are all sorts of reasons, and Matt, you can appreciate, you know, when I've been having these conversations of late, because I have to say, just to say, 12 years in insurance, I can hand on heart say to you, in thousands of interactions with senior people and other people in organisations in insurance of all types, climate has never once been a topic that has been brought up to me. And I think that means something, you know. But the storytelling or the forceful advocacy that we're up against as a sector out in the real world where our customers live, you know, compare the way that we talk about or don't talk about what we're doing with what Insure Our Futures, how they talk about what they expect of insurance. And I think, you know, it's no good. It's important that we understand in our own little bubble what we're doing and that we share that. There's lots of attempts to be collaborative. You know, Zurich are leading really important work on underwriting classifications and taxonomies. We need our measurements, we need our structures. I totally get that, and it's not a 2-minute endeavour. I totally get that as well. Meanwhile, out in the real world, Insure Our Futures are basically saying, you know, here are the 19 insurance firms that have said we're not going to support Adani. Here are the 9 that are not giving us an answer one way or the other, and we draw our own conclusions from that. So we can't operate in a bubble. The storytelling is happening. It's happening in ESG ratings, it's happening in civic activism. And just one last point before I move on, sorry, Laura. You know, somebody, I think it might have been Wes, mentioned Mark Carney. And yeah, God, you know, what an amazing guy. Wish I had known him. But remember what he said about the social license. And that was really insightful as well. Our social license depends on civic society's view of us and what notions of fairness and appropriateness. And that's what Build Back Better is basically saying. It's a massive conversation, isn't it? Saying, do you know what? That's not fair and we need to change it. So social license and trust go hand in hand. We're not in a bubble.
Thank you, Shân. No, they're all really interesting points, and I'm happy to keep it as conversational as possible, this panel, so please do chip in. Wes, just sort of onto a more general point about a green recovery before we move on back onto the sort of social responsibilities within the insurance sector. I mean, what's your general sort of overview or your assessment of the government's green recovery plans so far? Do you think they've been innovative enough? Do you think they've worked with industry enough? And I know you said that Labour weren't here to announce any policies, but is there anything that you would identify that Labour would do significantly different?
Well, at the moment, it doesn't feel like much of the conversation in Westminster is on the recovery just yet. It feels like we're still basically talking about the crisis and the crisis response. More generally, I mean, I've been challenging the government repeatedly in recent months because I think there's a degree of complacency that says the UK is one of the world leaders in tackling climate change. Our government is leading the world in this respect, that respect, and the other respect. And the government, in fact, in one exchange we had before the summer, I stood at the dispatch box and listed a whole load of Conservative government achievements in this space in order to make the point that this is good. The government can lay claim to being one among the global leaders in this space. But that is as much an indictment on the failure of global leadership and the fact that other people are even worse than us, than kind of saying, isn't the UK doing brilliantly? Because, and going back to Shân's challenge there about the 2050 target, I absolutely agree. It kind of makes my, shiver down, a shiver when I think about the 2050 target, and 2050 being the sort of the date that people talk about. It's this decade to 2030, that is the decade where most of the action needs to take place, because otherwise things become pretty irreversible and also much more difficult if you're kind of backloading progress. And I think there is a really big opportunity. I think there are things that government can and should be doing in terms of the recovery to COVID-19, where the economic recovery and the climate emergency imperative go hand in hand. Whether that's thinking about green infrastructure and jobs. I mean, even something as simple as doubling down on the home insulation programme the government has already announced and said it's committed to. Everyone wins. People get better homes and cheaper energy bills. You create new jobs for people who are unemployed, often jobs that people who've lost existing employment can move across to. It's not that complicated retrofitting homes, and also you'll need plenty of salespeople out there to go and make the case and tell homeowners and one by one about the benefits. So there are some really quick and easy wins that also generate longer term returns on that investment. So I'd like to see the government doing much more and being much more ambitious in that space. I think one of the other political challenges as well, and I think this is probably more of our problem than an industry problem necessarily. It concerns me that although climate change has gone up, I think it's the fastest riser on YouGov's tracker since it was created. Climate change has just shot up the agenda in terms of levels of public concern. But for understandable reasons, with everything that's going on, when you ask voters the extent to which climate change ought to be a priority versus COVID-19 response, they kind of go with COVID, and the environmental imperative they see as a sort of secondary and second order issue. And I think we've got to try and make sure that it's widely understood by everyone that these things do go hand in hand. And sometimes we're guilty in politics of talking a lot about the green jobs of the future. Well, if you lost your jobs today, green jobs of the future are neither here nor there. You're worried about losing your job now. And actually, I think, and Liam Byrne's been doing a great job on this with his West Midlands mayoral campaign, sort of given the history and the heritage of the West Midlands as a sort of the cradle of the Industrial Revolution, thinking about and talking about a green industrial revolution or a Green New Deal, whichever sort of language you want to use. I think we've got to show people that a lot of this stuff can be immediate, and it can be beneficial, and it can be meaningful and tangible and make a practical difference to people's lives now. And there is a real urgency, I think, to sort of get some of that right. And that's something we think about when we're challenging the government, because otherwise we sort of dance around talking about Green New Deals and green industrial revolutions, and people think, well, I've just lost my job. It's always very nice, but what are you going to do for me today? So I think that's That's one of the other challenges that we've got. The final thing I wanted to say, that, you know, thinking back to the title, which isn't just about a green recovery, but also a sustainable and a just recovery. I mean, there's also, going back to the point about data, I think there's a whole conversation to be had about the extent to which we now hold data on our citizens and are able to build pictures of our citizens, and how does the insurance industry use that data and information in a responsible way, picking up some of the, you know, challenges that Johnny laid down there. You know, how do you make sure that data is being used in an equitable, fair and responsible way, so that you don't end up baking inequality and disadvantage into insurance products and consumer protection, which I think is that this is a really big and important ethical debate. And I think we've got to be talking a lot more about the ethics of a lot of this stuff, and not just the sort of the opportunity that technology and data and artificial intelligence offers.
Thanks, Wes. And just quickly, staying on you for a second. I mean, what I completely agree about it's a lot more easier for people to identify the pandemic as an immediate risk to sort of like their livelihoods as opposed to the climate emergency. Although obviously that's very pressing. I mean, would you say it's the role of the private sector to sort of raise that awareness and drive that forward and put it into language that's relatable to people? Or would you say that that's a government responsibility and they need to be the ones driving the initiative and explaining to people that this is what a green recovery is and this is why it's important?
I think this is where partnership is really important, and having, you know, it's not just a job for industry or for government. I think this is definitely an and rather than an or. And of course, you know, you're talking to your customers all of the time. You're doing, you know, loads of market research on your customers and their behaviours and their thinking and what they do respond to and what they don't respond to. And I think we should be, you know, we should be talking all the time about what works and what people sit up and pay attention to, and, you know, how can we get the message right, and how can we drive positive consumer behaviour. You know, I mean, frankly, you know, some of the organisations represented on this call probably have more and better consumer insight than a political party that has to pay through the nose for polling of variable quality. So, you know, I do think there's lots of, I think, insight and shared understanding here. But certainly, you know, I can think of all sorts of examples where, you know, the sort of the corporate social responsibility agenda has been really beneficial in terms of changing attitudes and behaviours, whether within, you know, the staff of your organisations or your consumer base. I mean, think about, you know, LGBT equality, for example, and the extent to which, you know, the sort of diversity and inclusion agenda has changed the culture of the workplace, but also through the marketing and the advertising that that different businesses have done. It, you know, it's helped to normalise and, you know, just make a normal fact of life, whilst also bringing business benefits, because people think, oh, okay, they look like the sort of insurer that includes me and cares about me. So there are mutual benefits here, but this is definitely a shared, I'd say it's a shared responsibility to get the communication around this right and to get that social leadership right as well. Thank you,
Wes. So moving slightly away now from the environment and the green recovery. Johnny, I think, am I right in saying you're also the Cabinet Office Disability Champion, which you were too humble to mention in your intro. Obviously, this crisis has exacerbated a lot of the existing inequalities that were in our society and sort of exposed these very vulnerable demographics as well. What's the role of insurance here in sort of protecting these vulnerable demographics and ensuring them, like you said at the beginning, that they have the coverage that they need and that they know what is available to them and what they're entitled to?
Laura, yeah, thank you. And yes, I am. I've had that role now for the last 2.5 years. And it's a public appointment, and I should maybe say it's an unpaid public appointment. But as I said, and I have got lived experience of disability, and my industry has a great and significant role to play, because, you know, we as the insurance sector, we are the providers to UK businesses and families and individuals of their pensions, you know, their workplace sick pay benefits that go beyond statutory sick pay or in the main insured. But my sector is all about, it's all about pooling risk. It's built we've been successful over centuries in terms of, providing support to the many and not the few, and pooling risk. Now, in terms of disability, it's important that we talk not just in terms of gender and other characteristics, but we look at all characteristics, and we do think in terms of intersectionality, because if we don't do that, we just end up compounding barriers and harms. So the role for my sector is to demonstrate leadership. Let's not wait for government. Let's not wait for the new disability strategy. Let's get ahead. Let's demonstrate to the rest of the sectors of UK business and our economy that we are the sector that really does take leadership in terms of tackling the gender pay gap, tackling the BAM pay gap, tackling the disability pay gap and access for people with disabilities seen and unseen. And we are talking 22% of our entire population, 19% of our working population. Bear in mind that it's important we also talk in terms of visible and non-visible disabilities, because only 8% are, 92% are not. And 87% of disability is acquired. So as our society continues to age, more and more of our society, our people in our society, our family, our friends, our colleagues, will be, will have some form of disability. So we have to make sure that they've got ready access as they need them to our products or services, equally careers in our industry, in our sector as well. So it's, our industry is taking great steps, because we are quite clear in requiring now firms to disclose their gender pay gap. We're now talking about disclosing BAM pay gaps too. But it's great to see Matt on this call as the Chatterton Institute, because just recently we did some work where we produced guidance to our sector on disability, and we're now requiring chartered firms to disclose data about disability. So how many disabled people do you have in your organisation? What levels of workplace adjustments are you making? What levels of home place adjustments are you making? And let's talk about the pay gap too, because if we start talking about these things, that leads to, a disability strategy isn't going to deliver that much unless you know where you are today and you know the outcomes you want to deliver tomorrow, and you can measure your progress against them. So it's important that we do start to collect this data, and we talk openly about disability, and we talk openly about, how accessible our products and our services are. We talk in terms of, no one just talk, we live it. We openly embrace the social model disability. We don't let people's disabilities define them. And much of the talk about in regulatory terms in my sector and others actually, I do fear that the term vulnerable customer is being used, and that tends to be being used to define people. Well, that's wrong. People's disabilities should not define them. It's the problem that we need to tackle is the barriers that they face that stop them participating in our workplaces, being able to buy our products and services. It's that access that we need to tackle. And it's the role of the insurance sector, I firmly believe, that we should be demonstrating leadership to the rest of the UK economy in delivering that. And if we get ahead of government, then do you know what? Great, let's do it.
Thank you, Johnny. Yeah, that's such a critical and an important point you just made.
Laura, can I just say something very briefly about one of the impacts on insurance colleagues, so people working in insurance of COVID? The number of colleagues who have suddenly found themselves as informal carers. Lots we know, and it's a very widespread phenomenon that lots of professionals, lots of working people, are also informal carers. But that the stats are quite well. They shocked me. And talking about unseen disability, we're all vulnerable actually, because we're all human, and at some point in our lives we are going to have an episode of vulnerability, whether it's mental health or a vulnerability in a loved family member. That definition of vulnerable isn't just something, as Johnny's pointing out, that you're somehow born with or you're not born with. It's not that simple. And I think that mental health impact of COVID isn't just in the populations that insurance seeks to serve, but it's also amongst our colleagues as carers as well.
Thank you, Shân. That's a really important point. We've only got 5 more minutes. I was hoping quickly, Shân, just to get your comments around sort of what you would say is the sort of general sense of trust in the insurance sector at the moment, for people that rely on insurance. Do you think that there could be sort of a better relationship there? And I know the FCA's recently made a ruling on business interruption. Do you think that's done anything to sort of damage or dent that trust in insurance?
Yeah, I mean, because it's national news, and it's one of those really awful situations where it didn't work the way I wanted it to. You argued with me. I had to take you to court. It's something that people, you know, you don't have to be an insurance insider or have had to have used insurance and had a very positive experience, which thousands and thousands of people will have done. You know, sadly, that is what the ubiquitous person in the street might be able to pluck out of their heads right now when you say, what do you think about insurance and trust? Don't let me bang on, Laura, about insurance and trust and customer trust, because I could.
Okay.
But yeah, it's been, rightly or wrongly, you know, the intricacies of the 21 sets of wordings and the 60 insurers and all the rest of it aside, yeah, it's been another huge nail in our coffin.
I suppose this sort of leads me on to my final question, really.
Is it possible to get a mini writer for reply on that particular?
Go for it.
Go for it, Ben.
Before we kind of celebrate the death of the industry, I think
celebrating the death of the industry. I'm railing against it. I want it to live and breathe and be successful.
Go on, Ben.
Yeah, I mean, it always impacts on reputation and trust when you have a major uninsured event. And I think the national lockdown was an unprecedented situation and posed, you know, understandable questions around business insurance contracts. But that's why insurers supported the fast track process of the FCA, precisely to bring about clarity for customers and a speed. And obviously, you know, all insurers regret contract dispute, and we'll be kind of reflecting on the court case. But I think it's important to say too that let's not forget what the industry is doing. And I think the insurers have made quite a large range of voluntary commitments to help both businesses and individual customers. We're going to pay out over 1.7 billion in COVID claims around holidays, the most to sort of support customers who've had cancelled holidays, weddings, business supply chain, and also sort of initiatives that aren't talked about, like the sort of COVID-19 support fund, sort of 84 million to support charities, which is one of the biggest sort of corporate. Yeah. So I think it's, you know, it is a really difficult time for businesses, small and large, and we kind of recognise that. But I think it's important we also present a sort of balanced picture of what the industry is also doing.
And I completely appreciate your point in that this is a completely, sick of the term, but unprecedented experience we're all living through here, and every business is just trying to sort of navigate their way through it. Matthew, I just wanted to ask quickly before we run out of time here. Nobody sort of wants a second lockdown, obviously, but we don't know the trajectory that this virus is going to take over the next few months. I mean, how would the insurance sector, broadly speaking, cope if there was to be a second lockdown? And are there any lessons from the first that could perhaps be taken on board and could be reflected in any second wave?
Yeah, no, that's a really good question, and I think both Ben and Shân make good points. I think insurers have, given what happened up until now, insurers have done the right thing in taking part in the test case and trying to provide as much clarity as possible. But Shân is also right. We every time we find ourselves in court, you know, that has a huge reputational hit, and we have to think about how we avoid doing that in future, because you know, whilst there were lots of things that with hindsight, you know, we couldn't have foreseen, there are some things we could have, and we need to learn from that. I think in terms of going forward, the first thing in the limited amount of time we have is just keep on listening to customers, test what customers think they've got and what compared to what insurers think they've got, do all that product governance stuff to understand where our customers are and to communicate with them more effectively. I think picking up from Johnny's point, there's a very easy knee jerk around kind of withdrawing coverage when we realise how big the risks really are, again, insurers can't just, it's a lazy thing just to withdraw coverage. Insurers have to think about why they're doing that. They have to go back to government and look at creating wider sort of social solutions to problems for people who with the best will in the world can't get cover, and insurers have to give the right kind of advice and kind of emotional and advice support to people who can no longer get cover, and point them to how they can manage their risks and how they can engage with the policy making process, champion their needs in a much more vocal way, to make sure that a withdrawal of coverage doesn't mean that people are simply left out in the cold.
Thank you, Matthew. That's a great point to end on as well. Thank you all so much for joining. I really enjoyed that discussion. I found it very interesting. And you're all obviously very passionate about what you do. And thank you as well to Wes. I appreciate that Parliament hasn't actually gone into recess. So it's a very, very busy time. So thank you so much. And thank you to the Chartered Insurance Institute in particular for hosting this event and putting it on. And I hope you all enjoyed it and have a good rest of your afternoon.
Thank you.
Thanks, Laura.
Thank you.
Bye.